Okay, lads, so take none of this lightly. Everything that I'm going through, I use myself and I have used to bring myself to the level that I'm at today in trading. So with that being said, let's go through the 3 pillars to success in trading, the 3 cornerstones to success. These 3 things, if you don't have them in check, if you don't have them all working in harmony, you will never become a profitable trader. And it's as simple as that. Now, these 3 things are not concepts, they're not strategies, they're not nothing to do with the charts. Half of this is to do with you yourself as a trader. Things that you do day in and day out that you might be lacking on, that you didn't realize that you must even be doing. Things that need to be done on a day-to-day basis, week-by-week basis, that allow you to improve as a trader. Now, many of you are sitting there believing that you have everything, yeah? And that there's one thing missing, there's one piece of the puzzle missing, and you don't know what it is. And a lot of people are determined that it is psychology. And we're going to bust that myth in this course because, in my opinion, if you have the 3 pillars, 3 cornerstones in trading, then your psychology is fine. Psychology is one of the cornerstones. We're going to go through all 3 now, but without one, you don't have all. You must have all 3 working together in order to have success in the markets, okay? So, what are the 3 pillars to success in trading? The 3 pillars are strategy, psychology, and risk management, okay? Now, these 3 things are what you need to have in check. Strategy being the easiest, yeah? In my opinion, you can learn a strategy easily, okay? Doesn't mean you'll be able to trade it and play it out, but you can learn concepts, you can learn confirmations, and you can learn market analysis very easily in 2025. You can go on my YouTube and there's everything that you need, but that doesn't mean you can become a profitable trader from it, okay? There's still many things that you have to conquer in order to make money in the markets. There's still many problems that you must overcome in order to make money in the markets. Just because you have a strategy, it doesn't mean that you're going to be profitable all of a sudden, okay? A plan and a strategy is just one step. It's just one piece of the pie. As you can see, there's 2 more pieces, the psychology and risk management. Now, sticking with strategy for a second, your strategy must be fully comprehensive, reliable, consistent, something that you have gathered data on over time in backtesting and also over time in live trading. So you have backtested results that allow you to bring yourself live, and then you have the live results that allow you to continue to trade how you are trading. Because if you're not gathering data, you're not proving anything to yourself. You're not showing yourself that you are being consistent with profits. You're not showing yourself that your accounts are growing over time. You need to be very strict with everything that you're doing. Treat trading like a business. It's as simple as that. Now, the second pillar, the second cornerstone, the second must fucking have is psychology. Now, this is what we're going to be going through this whole course. It's all about psychology. None of this is about technical strategy or risk management or how you can look for a position or how to manage a position. None of that. This is all about psychology and how you can fix your mind when you're trading, okay? Because it's very important. Now, like I've mentioned already, these 3 all work together. If you don't have a strategy, how do you expect to have good trading psychology? Okay? Like, that's just common sense, isn't it? Now, if you don't have risk management, but you have a strategy, what makes you think your psychology is going to be in check? Because you're risking all over the gaff. When you lose, you're going to lose heavy. And when you win, you're most likely going to win light because your risk is not consistent. So what makes you think your psychology can be in check from that, yeah? It doesn't make sense. Okay, your mindset can be good. You might have amazing psychology, you know? I'm a robot. I don't care. I'm emotionless. I'm just following a plan. But if you haven't got risk management, then you're not going to make fucking money because you will lose. And if your risk isn't managed, then when you lose, you'll lose big and you'll lose more than when you win. That's why risk management is important. So you can see now why if just one is off, all is off, okay? And we're going to go into this a lot more in depth as we go through. But essentially, psychology is emotionless trading, is acting upon a plan, a strict plan that you have set yourself with strict rules that allow yourself to prep for loss, understand data. Now, psychology is easily built. It's not something that's ever given to you. It's not something that no one can ever give to you. No one can ever help you track this data. There's not an algorithm that can track your psychology. There's not a trading journal that can track your psychology. There's not a fucking software or a funded account that can track your psychology. This is why it is so missed, because people don't do it. So why are these so important, and why must we have all of these in check? The reason why we must have all three in check is because these are the main corners to a foundation in trading. Yeah. If you have all three of these in check constantly, then you will be able to consistently trade profitably and not worry. Even if you have a bad day, a bad week, a losing streak, it doesn't matter, because if you know that you have all three in check, over time you will make money. So just keep them all A1 and you will be sorted. Now, what is the effect in falling off in just one of these areas? It's a domino effect. If one is off, all is off. I've said this a few times already now, but if you don't have your strategy in place, risk management will be off. If your risk management is off, your psychology can never be correct, and it can be reversed. If your strategy is off, then your risk management is off, and then your psychology is off. And if your psychology is great, but your strategy is off, then your risk management will be off, because you will be risking not accordingly. No, it's a vicious cycle to get trapped in, and it's a cycle that most people are trapped in. And the reason being is because they never focus on the third pillar, which is psychology. Now, most people think psychology is just turning up and acting or thinking a certain way. No, you have to program yourself to think like this. You have to train yourself to think in a certain way. And how do we do that? Well, that's exactly what I'm going to fucking teach you, isn't it? So, what happens when we have all three trading pillars working in complete harmony? You have consistent profitability, okay? When you have all three pillars working in harmony, this is when you feel unstoppable. This is when you're on the right side of the market. This is when you're making consistent profits. This is when your losses don't faze you, because they're calculated and your data is tracked, so you understand how many times you should be losing and how many times you should be winning. Now, these are all things that you understand through gathering data on all areas in trading, really. Now, I'm going to explain to you as we go further through this course exactly how you can gather data on yourself, how you should be journaling your thoughts, feelings, and emotions, and also how you can journal your strategy properly too. But like I said, this is mainly about psychology. This isn't about strategy and technicals. This is literally all psychology, all mindset, exactly how you can reprogram yourself into becoming a successful and profitable trader. Now, when you have all three working, trading feels like it's on easy mode. And it's understandable why, because you have every single area checked and covered. And it's hard for you to see, like, a losing trade doesn't mean you've lost. When you lose, it means that you have fucked up, yeah? You've done something that's made you unable to trade again tomorrow. You've blown a funded, you've blown your account, you've done something stupid. That's when you fucked up. That's when you've lost, yeah? A losing trade doesn't mean that you've lost. You're just playing out probabilities and playing out a strategy. That is why we need risk management. No trade is ever going to fucking win 100%, okay? If that was the case, we'd all be multi-millionaires within a few days. Fucking full-point accounts, bro. It's not how it works, all right? We have to be strict. You have to be consistent. And you have to understand what you're doing. So, that is trading success by default. That is exactly how you achieve trading success. Now, I'm going to break it down a lot more in depth, piece by piece. Strategy, psychology, risk management. I'm going to break down actionable steps and things that you must be doing now, from now on, for the rest of your trading career, in order to grow, in order to learn, and in order to actually improve as a trader. And some of you might even be at a point where you've made any fucking money yet. So let's get you to that point first. Let's make some money and then continue to do this to grow and improve, all right?